You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionFit.com.
All right, everybody. Welcome back to the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo, coming to you from the Options Insider Radio Network studios here in scenic, perhaps not too sunny. Actually, this week, not too bad, pushing 70 degrees, so that's pretty good for November in Chicago. Of course, ye old options capital of the world. We record a lot of fine programs here on the old network, and the best place to find all of them, of course, our website, theoptionsinsider.com. Surf on over, click around, a lot of fun stuff to do there. And of course, when you're done reading, you can click on the Insider Radio Network tab and do some listening to our 13 different programs, thousands of archived episodes. And now, again, we're working to surface some more of that old stuff for you. If you haven't been listening since 2007, which I know many of you haven't, then we're going to make it a little easier for you guys to discover some of that old stuff. That's coming down the pike soon. But in the meantime, you kind of got to fend for yourself. Dive into the deep waters of our thousands of episodes of all sorts of good stuff, including nearly 500 episodes of this here program, The Option Block. And, of course, you can find all that, of course, in the other big program providers there, iTunes, TuneIn, Stitcher, et cetera, et cetera. And, of course, even via our mobile app. I was playing around with the different versions of our apps this weekend. A lot of fun stuff baked in there, listeners. You can even get to the site directly through the app. And of course, you can use our questions or comments. You can even call us directly through the app. Pretty cool stuff. Some of the intrepid amongst you have already taken advantage of that. But of course, you can find that app in pretty much any of the major app stores, iOS, Android, and indeed the Fire App Store as well. And joining me on the program today, starting off, let's go in order of proximity. Though it's kind of hard to tell because the Greasy Meatball is always floating around, but we'll just guess that Uncle Mike is closer. So we'll go into the hinterlands known as lovely St. Charles, Illinois, where we welcome on Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
Always a joy to be here. And you're right, you never know about that Sebastian guy. He could be anywhere.
He could be right down the street. He could be in my closet here. He could be in Detroit. You never know with that guy.
He comes out of the closet at any point. You never know.
I kind of set you up for that one.
We knew that. That was a tee-off shot there.
That voice, that tinny voice, listeners, is none other than the Greasy Meatball himself, coming out of a closet near you sometime soon, also working over there in the land of the pit, doing some mentoring, and then about to launch his Carmen Line Fund coming soon. To a fund universe near you. So a lot of irons in his fire. Mr. Greasy Meatball, welcome back to the program, sir.
Hey, good to be here. Things are good. Yeah, I'm actually in the loop right now. So I'm under what circumstances, whether I'm at my house, I mean, honestly, if I'm not out of state, I'm closer to Chicago than where Mike Tosaw out in St. Iowa.
Usually, but you never know. Sometimes you're in parts unknown. So just to be rather the safe than sorry, I know usually where Uncle Mike is within a certain degree of certainty. So I kind of start there. All right, listeners, speaking of starting there, it's time to start the show. So without further ado, let's dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the show where we break down what's moving, what's shaking, what's rocking, what's rolling, what's catching our eye in the broad markets today. We are recording this on Monday, November 2nd. Hard to believe it's already November here. My mind is still not ready. I'm still back in mid to late July in my mind, so I'm a few months behind. But c'est la vie, the year is screeching to a close, and the market's going right along with it, screeching to the upside today, pretty much in rally-ho mode. Most of the major indices up 1% or more on the day. Only laggard being the Dow, up nearly a full percentage point, but not quite making it there. And of course, ye old VIX cash coming off on the downside, off a little over 0.75 of a point there to a little bit over the 14 handle, 14.2 as we're going into the show here. A couple of things seem to be conspiring, if you will, to boost the market higher. Got a little bit of earnings, but also got some construction spending numbers rising to their highest level in 7.5 years. All of that really seemed to be just pretty much pulling the pin out of the market and saying, go forth and rally, young sir. And it did indeed do just that. Mr. Greasy Meatball, we'll start with you because you haven't been on the program in a while. Amidst all this sea of green on the street today, what really caught your eye?
I think the Russell 2000 is what kind of caught my eye. The S&P was up nicely. Nice move in the Dow and the NASDAQ. But the Russell, again, almost doubling the movement of the other indexes. The small caps are seeing a huge surge in buying. And, I look at the RVX, and it's now trading at a 5-point premium to the VIX itself. And this, a month and a half ago, the two had flip-flopped. It's now reached that new extreme, that other extreme, and rightfully so. I mean, if the Russell's going to move at double the rate of the S&P, then things are moving around. Additionally, VIX itself, they gave it a little bit of a slam ski today. The November future down big. The same thing with the December, and more than VIX itself. Although November is still trading at a nice 1.5 point premium with only about 2 weeks to go till full expiration. Finally, a little weirded out. We're in the middle of this huge rally because the Fed's not going to raise rates, and yet we're seeing TLT and gold both softer today. So that's one of those chalk it up to go fig.
Yeah, willing to crush the VIX December future shows that they're not too concerned about a lot of rocking and rolling going on towards the latter portion of the year. But you're right, as we're recording this right now, an exact 5-point premium out there in RVX over VIX, about 14.13 versus 19.13 out there. It has been kind of interesting to watch RVX, of course, if you're not familiar, listeners. That is indeed the Russell VIX. We've talked about it many times on our Volatility Views program, and it is indeed a fun one to watch, particularly recently, as Mark mentioned. It did invert. Small caps usually kind of structurally more volatile than their large cap brethren. And for a little while there, a few weeks ago, that inverted, and all of a sudden the large caps were getting the lion's share of the volatility. We've since seen that kind of revert again, but it has been interesting to watch. We've talked many times on Vol Views, though, but why the RVX still, even with these inversions and everything else, the product itself, particularly from an options perspective, hasn't really lit fire. Part of it undoubtedly due to the fact, the lack of an underlying, really. You can approximate some underlying with some of the other products that are out there, but they're not really the direct correlation. So that's, I'm looking at it right now, about 45 contracts open. That's pretty much about where it's been averaging since birth, that one period. Briefly, there was that brief convergence again between VIX and the Russell, and that's when they really seemed to go on fire for a little while, and volume really started lighting up in RVX, and ever since then it's kind of been around this 60 contract or so level. Hopefully once they get the underlying sorted out, that'll really start to boost. But still a lot of interesting things cooking off in a lot of different areas. Uncle Mike, what caught your eye out there in the hinterlands of St. Charles?
Here we go. In honor of Mark Sebastian being on the show today, I got to do a late 80s, early 90s style reference from the CNC Music Factory, an excerpt from the song Here We Go, where it goes, energy, energy, bang. Today, energy really caught my eye in that both natural gas and oil were down, but yet energy stocks were up. XLE was up over 2% on the day. One stock in particular that really caught my eye was Chevron, actually up. Where'd it go here? Help me out, Mark. My quotes are having an issue here.
94.96, up about a little over 4 handles, or 4.5%.
Wow.
Yeah, so I think what's unique about today, And I haven't had a chance to really dive into this one as of yet, but just kind of going through the end of the day, just looking at my end of the day quotes and going through some things, is the fact that, yeah, we did have a rally today in the market, but energy actually, or XLE in general, is actually up about twice what the market is up. And in particular, when you got something like Chevron, it already had its earnings last week. That's something that I can't give you any news on right this very second because my nose has been buried in the screen all day looking at the market as a whole. But that is something that really sticks out to me like a sore thumb in terms of what is happening in this marketplace today. Now, combine that with the fact that neither natural gas nor oil were up on the day. Both of them were down, not significantly, but both of them were down. That definitely raises an eyebrow to me as to what is going on. Now, the other thing, I think that gold and silver, until we get some type of direction from the Fed, I really don't see a ton of movement at this point, but I know that reverses from what my sentiment was before the Fed spoke, but I think that once we get some type of normalization in interest rates, I do think we will have a little bit of movement to the upside, even in the short term, on the shiny things. But yeah, to answer your question today, I think the big story of the day, from what I can see, is energy.
Yeah, I'm looking here for some data on Chevron. Of course, oil taking it a bit on the chin today. More weak data out of China, of course, piling onto the commodities. Also strong production coming out of Russia, kind of a 1-2 punch to lean on crude a little bit. You're right. Chevron rally homo today up over 4%. Seems like from my cursory glance here, it seems like they might have had a few of their analyst estimates raised, and that apparently conspired to really boost the stock off into a decent mode. Of course, we're coming off on the heels of some decent earnings coming out of Chevron. Listeners, they reported on the 30th. They closed right then, right around south of the 91 handle actually, and they're already up near over 4 handles higher than that. So clearly, the market liking what they're seeing. Combination of earnings, some price targets. Of course, some price targets I'm looking at aren't that much higher than where it is now, so they're not too big on the adjustment side. But still, earnings and some analyst love combining to boost Chevron, despite the fact that crude taking it on the chin. Some weird stuff afoot out there in the market. As always, speaking of weird and perhaps a little bit gross stuff, I often refer to good old Chipotle as the stealth apple over here on the show, and they weren't too stealthy today, taking a drubbing. They're always out there with their quality of their food and organic and all that kind of stuff. And of course, the flip side to organic quite frequently is some foodborne illness outbreaks. And that's exactly what struck Chipotle, the stealth apple today. Took it. They were down quite a bit earlier in the session. They were off, I think, close to 30 odd handles or so, down to about 608 intraday before closing, rallying back, getting back 16 of that. It closed at 624 even. So apparently the market deciding only off a mere 16 handles. Apparently the market deciding that sell-off was a bit overblown for one outbreak. I believe it was Seattle and Portland to shut a few dozen of their restaurants out there. This is on the heels of some that happened, I believe, earlier a few weeks ago as well. So they've had a few outbreaks, and they tend to pile up, particularly on these names that are known, again, for their healthy food. And so they tend to take a bit of a more drubbing than perhaps, say, a McDonald's would in a similar circumstance. They also had an outbreak in California recently that people got sick. So they had a couple of bad weeks out here, and apparently that's leaning on the stock. Of course, their earnings were nothing too great to write home about as well. They closed right around about over the 700 handle going into their earnings, and then of course I said today closing 624. So you can do the math there that things aren't exactly lighting it up. Speaking of lighting it up, Mr. Greasy Meatball, was Chipotle lighting it up over there in the pit chat today? Any of your mentees and traders fans of their tinfoiled burritos and also the stock?
I mean, no, this is one that we know it trades actively and it trades a lot, and some people love it, some people don't. I love that they pitch themselves as healthy and organic. Meanwhile, they're giving you a 9,000 calorie burrito, and it's kind of a hilarious little piece that they've created. But people love it. People are there. So interestingly, nothing super crazy traded. I do like the fact that it's getting kind of drubbed and the volatility starting to increase. It's looking like maybe an interesting little call spread trade or some sort of little short butterfly type trade. But you had a real opportunity to buy options on the cheap Friday. But obviously, if you didn't know that, then who knows?
Yeah, it looks like the call traders got their inspiration back at the bottom today. Maybe scoop some bargains because it was leaning heavily towards the puts during the day, as you might imagine, when the stock is off so substantially, about 5% or so. Ended up close to even, a little more, 1.4 puts over calls out there. So not entirely terrible. Also, not as perhaps explosive volume as I expected. This name has been doing about 9,000 contracts a day of late. Only did about 33,000 today. I thought it would be a little bit more, given all the headlines and just the severe drubbing we saw out there. But we'll see. This is kind of a confluence of negative events piling up here for CMG. We'll see if this continues to weigh on it. But it looks like maybe the 700 handle a bit in the rearview mirror for the time being here for ye old stealth apple. And since we're talking volume and options, it's time to keep on rolling into one of my favorite segments of the show, the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
Everybody, welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the whimsical, the sometimes downright just bizarre, I'm out of W terms to describe it, paper that is lighting up the old tape today. Going to kick things off. We were just talking about healthy, wholesome, organic food. Of course, salmonella or E. coli outbreaks notwithstanding. Now we're going to flip that script and go to heavily processed chicken. Indeed, the realm of Tyson Foods, Inc. You know them, you love them for a wide variety of products, including a lot of chicken things in bags on the shelf of your old grocery store. This name closing $44.78, up about 1% or about 42 cents on the day today. This is the name that does about 4,500 contracts a day, doing nearly 28,000 today. So just lighting it up by pretty much any metric you could apply to Tyson Foods today. And apparently most of that love, pretty much all of that love, coming on some sizable upside a little bit down the road calls, in particular the Jan 50s, lighting it up to the tune of, when we first started looking at these this morning, a block of 6,500 going up for 65 cents. Paper buy-in over there on the MIAX, of course, the Miami Options Exchange. Total volume again on that strike on the day was over 21,000. So serious paper, nearly 4x coming in on that initial block to fill up the strike there today. So it was pretty much like a steady 65-cent bid, it seemed like, for most of the day. In fact, they went out 65-cent bid on the end of the day there. So still some more size to go there on that bid. But either way, he did nearly 22,000 contracts. That's on open interest of just 14,000. So clearly this was open in paper here. Look for some stock. Didn't see, some stock went up, but didn't see enough to really call this delta neutral. So we can't really say it went up printed with stock unless maybe a few chunks of that 21,000 had a little bit of stock attached to it. But that would be an odd way to go. But nevertheless, we've seen weirder. Mr. Sebastian, we started off talking about wholesome food. Now we're talking about someone who's just loving himself some processed chicken. What's your take on gobbling up all the upside here in Tyson Foods?
Is this another play on industry consolidation? We've seen a lot of these different groups get swallowed up. So, is Tyson going to get swallowed, or is Tyson about to swallow somebody? That's what this kind of points toward, though, for sure.
It also points towards a few titles, like swallowing up Tyson chicken.
Indeed.
All sorts of tasty titles to go in where we have the food-oriented names. And I think since we're keeping on that theme of producing tasty chicken and other food-related products, let's just keep it rolling here in the old Odd Block. Going to move on next to a name I don't believe we discussed this one, at least not for quite some time here in the old Odd Block. This is Pilgrims Pride, ticker symbol PPC. Closing today, $19.21, up about 22 cents or a little over 1% on the day. This is the name that does about 1,500 contracts a day, doing nearly 16,000. So lighting it up today. And of that nearly 16,000, almost 15,100 of those coming in some pretty sizable put sales. In particular, one mega block this morning of the Nov 17 puts going up. Looks like paper selling for 15 cents, 15,000 times. One mega block for all 15,000 of those going up over there on the ARCA. A total of nearly 15,100 having gone up on the day. And surprise, surprise, about 15,100 open on the strike. What does that tell you, loyal listeners? Well, it tells you probably lean in close. Again, we got to wait till tomorrow to know for sure, but when it looks like a duck and it quacks like a duck, chances are it makes delicious chicken. And if this is indeed a close here, then it seems like they want to take some of their money off the table here and live to fight another day. This name has been vacillating mostly to the downside over recent months. Of course, they had some moments after earnings where they could have taken advantage of perhaps a little bit better levels. The stock got down into the 17 handle briefly there post earnings. So if they wanted to close, they had some better levels at which to do it. But still looks interesting nonetheless. Mr. Sebastian, let's move on to our next part of our chicken-themed odd block today with Pilgrims Pride.
It's a prideful pilgrim today. What can I say? It's been. There's some sort of maybe the two of them are the team. Maybe that's where all the merging is coming from. Who knows? But that appeared to be a closing trade. That would be my guess, just based on the open interest. So maybe somebody was engaged in some sort of I don't know what exactly they did, whether they were short or long, but this was certainly a close. So my guess is somebody that was short these at 30 cents decided to close them for 15 and make themselves some profits. That's my best guess.
It is indeed a tricky one. We'll have to know tomorrow, but open interest indicates they are indeed, whichever way they were going, it was indeed 100% probably on the close. And you're right, maybe these are, when you're talking big players in the processed chicken realm, these two names do leap to mind. So perhaps it is more than a quinky-dink that the two of them are being featured in the odd block on the same day. And since we're talking food, let's wrap it up before I get too hungry here in the odd block. Coming to a close on Sprouts Farmers Market Inc. Ticker symbol SFM, closing today just a hair under $21, up about 55 cents or nearly 3% on the day here for good old SFM. This is the name that does south of 1,000 contracts a day, doing 10,000 today. So that's fairly sizable paper, no matter how you break it up here in the old SFM. And in particular, what caught our eye was the Nov 20. The Nov 20 strike as a whole seems to be the strike du jour today. Action on both the calls and the puts. What caught our eye really was the call love, in particular when we saw this morning about just a tick under 5,000 of the Nov 20s going up for $1.25. Looks like paper buying. Looks like they did it delta neutral too on a little over 250,000 shares going up against those calls. So not surprisingly, implied vol popping on this pretty sizable trade. Also saw 2,000 of the puts going up as well. So perhaps they're just loving themselves that 20 strike and they'll take it where they can get it. But for now, we're going to focus primarily on the old call. Actually, about 1,100 of the Nov 17 half puts as well. So just a lot of action out here in Nov. Most of this, actually all of this exceeding the open interest here. So clearly all opening paper out here in the Nov. Mr. Greasy Meatball, take us home. What's your call here on this Nov Palooza, I guess you can call it, out here in SFM?
Nice scoop early in the day buying these for $1.25 in bulk, because they went out $1.85. So
yeah, that looks nice.
That's a nice purchase. This is one that actually doesn't trade that often, but it sees a lot of activity typically around earnings. So I'm not surprised that this is one that did see some volume in the week leading into earnings. We've seen it do this before. Doesn't mean it's going to actually do anything good. My guess is this guy takes his money and runs tomorrow, but this is not the first time we've seen SFM catch a bid in and around earnings.
Yeah, it seems like he's playing that ride the vol train, and it's working out pretty well for him, at least on the option side. Stock print, not so much, nearly a handle to the south, but that tends to happen when you have trades like this going up. They get a little bit of wiggle room on where they print the stock, where they print the options, so it's kind of a bit of a combo deal as it goes up, but still not a bad mark there on the old calls, and indeed on most of their trades today. Interesting stuff. Keep an eye on this one. It's got earnings coming out, I believe, on the 5th, so just a few more days here. So someone obviously getting themselves some earnings juice ahead of the big announcement. Speaking of the big announcement, it's time for Uncle Mike to announce some strategery because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, welcome to the strategy block. You guys know the drill. Every Monday, sometimes on Thursday, but usually on Monday, I turn the reins over to Uncle Mike, where he dispenses some options, wit, and or wisdom, sometimes sprinkled with a dash of hilarity. I hear through the rumor mill, Uncle Mike, by way of my birdies, and indeed my purple, not my yellow minions. I had to let those guys go. They were just draining me of bananas left and right. But the purple guys, the combo of them are whispering in my ear, Something magical is afoot today in the strategy block. I'm not sure what they're referring to, but I have the whiff of magic. I'm not sure if it's a David Copperfield or a David Blaine or choose your Davids. Hopefully the former. Maybe not either of them, but still. What are they telling me? What's this magic thing going on today?
All right. Well, we'll have to get into that, but we actually are at the cusp. If the S&P goes up another 15 points to where I can have a client that has been in all bullish strategies the entire time with which he has been with me since May, to where the market could be down since he got in, and he can be up money in his account and have 4 times the buying power. And have 4 times at least twice, possibly more of the deltas. Now, is that exciting to both Mark and Mark or what?
Super exciting. Tell me more, sir.
All right. So I have a client, and his son is getting married, or his son was getting married last spring. His son is in college. He's a junior in college right now. So he was 20 years old when I started talking with him. And basically, he had saved up going into his marriage. He understands that he's going to be poor with his wife for the next 2 years of college. But they wanted to get married. And so from his lawn mowing money, from his whatever other job he had money, he had saved up about $5,000. And so he's working his way through college. He's doing things right. And so he wanted to just basically start his financial future. And so with that, my client's son, we sat down, we talked for a while, went through a few things, and then we came to the conclusion that he really needed that $5,000 for his emergency money. And it was actually a little bit over $5,000, but he's like, you know what? And he had invested that money throughout his life in a variety of mutual funds. So he's been really trying to do the right things with his money in his entire life, and kudos to him for that. But after going through it, I'm like, well, if you guys get something happened where your car breaks or something along those lines, you're going to need some money for an emergency fund. So we both agreed on that, but he really wanted to start doing something for his retirement. So with that, what we did is the Uncle Mike special simulated index concept, which I talk about all the time on this show. I told him, just let me have $500 of your money. And what I'll do is I will get it to where we can have the equivalent of having all $5,000 invested in the market in and of itself. SPY was around 213 at that time. It was close to the all-time highs of the market, naturally. And so we sold him out of his mutual fund. And with that, I put on a January 213, 220 call spread on SPY. It's not enough money to where I can be extremely active with that, but I can be somewhat active, as I'll talk about here in a moment. So what that did is the 213, 220 January bull call spread actually created around 23, 24 deltas, which is the equivalent of the amount of shares that he could have bought with $5,000 had he bought SPY. Now, I know it's not perfect, and I know there is a limited upside when doing such a thing, but what we wanted to do was create the next best thing to being in the market, but yet still allow him to have some emergency money in case his car broke down or something along those lines with him and his new bride. So with that being said, and keep in mind too, I actually looked at the minis for this type of a situation, and the bid-ask spreads are just far too wide to even consider doing anything with anyway. But long story short, or I guess long story continued, I should say, as everyone knows, right after May, the market just went south for the most part. And what we were able to do is we got out of the we got into the 213, 220 call spread for about, I think like $3.80 or $380. So the market went south, and we got out of the 220 call for, I believe it was 16 cents, something along those lines, 16 or 15 cents. So around $15. So at this stage, the market has come back as of today, and now he's almost back to break even in his account. The market is down, and if we have another day tomorrow like we had today, even half of what we had today, my estimate is that his account will be in the green, and we still won't even be at the levels with which he got into the market at in the first place with this specific strategy. So with that being said, the coolest part about this is, number one, he's had exposure to the upside of the market for all this time, or this potential. But the best part of this is that now, if we get back to around the 213 level of SPY, then he's now going to have twice the deltas for the upside, at least twice the deltas, probably even a little bit more, and he'll have unlimited upside on the marketplace. And with that, he's still only going to have the original amount of risk with which he had in the first place, which was just under $500. The fact that, and I think he has probably around $100 in cash in his account right now, because it didn't even cost us the full amount to get him into this spread. But with that, it's just an example of how, if you use options in the right way, you can have participation to the upside of the market without having a ton of downside. So normally what a lot of financial advisors would say, oh, well, you have no kids, you have, you want to save for retirement, let's just allocate 90% of your money to the stock market. Well, I think that's okay for some people, but in my client's situation, he might need that money in case something happens. And this is a way with which a poor college kid can have some type of retirement investment, yet still have an emergency fund and still be able to participate in the upside of the market should it indeed happen. So with that being said, and I'll tell my information on Around the Block towards the end of the show when we do our pitch, of course, but this is something with which I help people with all the time, and that if it's an individualized situation as such, you can do things like this to make your situation right for you and use options for the betterment of your portfolio. And for the people that want to get rid of options in an IRA and make it so that they're not a vital part of retirement investing, whether it's for hedging or whether it's for doing something like this, using them in a protective style way, what I have to say to them is, take that.
You are indeed the real Magic Mike, sir.
Oh, I thank you.
This kid sounds far too responsible for my taste. Getting married and in college, he's saving for his retirement. Who is this kid?
I'm really impressed by him. I'll just say that.
Far more responsible than I was at that age, shall we say? But yes, good advice as always, and indeed the magic powers of Delta, a gift that keeps on giving. Speaking of gifts, we got a little bit of time, listeners, so we can give you guys a little bit of extra gift on the program today and dive into a Monday edition of the Mail Block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill. Send us your tweets to @options, or on Facebook, we're just the Options Insider. Options Insider on stock twits, or questions at theoptionsinsider.com. In fact, a lot of that indeed baked into the mobile app. So you're streaming some shows in the mobile app, just hit those buttons. Send us your comments, your questions, your righteous outrage and umbrage We love it all. And of course, you can also hit us up via the website like our first victim did today. We don't hit the website comments that much, so maybe I should feature them more here on the old program. This comes from CSpell. He's writing about an alert we put up on the site back on October 19th. He writes, hey, with SC down 14% so far, this was on October 29th when he posted this, and it looks like some investigation pending. It seems our friend was on the wrong side on this one. I think you should have a follow-up on the odd block as a part of the show. It could be fun. What he's referring to, listeners, if you just go to our website, look for or search for Google earnings call buyer in SC. This is indeed Santander Consumer USA. We profiled them back on October 19th. At the time, the stock was trading a little bit over 21 bucks. We saw paper coming in, piling in that day. Started off with a couple of hundred of the Nov 22s going up for about 55 cents. As the day went on, nearly 1,000 of those going up. Looks like paper mostly buying here for 55 cents. Of course, that means stocks got to rally ho for that to happen, and those to break even to the tune of 22.5 on the upside. And if you've been paying attention to good old SC in the weeks or so since earnings, hasn't exactly been all upside palooza here. In fact, it's been all downside. Santander closing today 17.5. So yeah, this one, at least initially in terms of direction, not looking too good. But let me put a caveat in there, because it is easy to come in and write off and say, you know, well, this one, Sky didn't do too well here. And his initial prediction may not have been correct, but indeed, if you look at the actual chart here of good old SC, he put this trade up on about the 19th, and this name did have an extended period of upside going into earnings. In fact, right on the 29th, it hit that magic level of about exactly 22.5. In fact, it opened right around there. So that was his break even, I should say, on that level. I'm trying to pull it up now as we have it here for the 29th of October to see if indeed we did have any open interest on that strike. And I'm having to pull it up here to see. We didn't have any volume up there. I'll have to see if he closed or not. But at least in the initial run-up, if he had a chance to get out, he did have a brief window in which to dump these puppies, and probably for a decent profit before everything went to hell. But I could see how your initial blush there that this guy didn't do too well could certainly end up being the case, particularly if he wasn't well-timed and if he got greedy and if he expected some upside initially after the earnings. And he, of course, was woefully surprised to the downside. And this goes back to what we say a lot in this program, too. Just because we highlight these doesn't mean we're saying these guys are correct or anything along those lines. In fact, we've said many times on this show, the size money, not always the smart money. This could indeed be one of the case. Let me try to drill into the open interest here while we're chatting about this. What do you have to say for our friend here who's worried about the fate of our insider, or perhaps not insider trader there in good old SC?
Well, it's nice of him to be worried about the insider or perhaps non-insider trader. That's always a good thing. But I think you're right, Mark. If he did have, I would think that if someone is going to be that nimble and be that able to get in on a trade that quickly and in that type of manner, I would think that he probably got out of it when he got some type of profit involved. Now, do we know the information in terms of when he actually got out of it? Because I did not see that in the notes. Or did
no,
we see
I'm trying to pull it up right now to see if I can find the open interest when he closed it out there on that strike. So I'm still digging. You can keep going.
Got it. Yeah, because typically from my experience, when people are doing earnings trades or doing something along those lines, that they're just buying a bunch of calls or trying to scoop up a bunch of premium like that, you're not looking to get the premium to go from you get in at 50 cents to get out at $9. That's typically not the case. If you're just risking 50 cents, a lot of times, from my experience, and you guys could probably concur on this, once you get a profit of maybe 50% or at most maybe 100%, you're probably going to get out of it in some way, shape, or form. So I would have reason to believe that he got out of that when he got his window of opportunity to get out, because I know I sure would have.
Well, and Mike, another idea is we don't even know if he was buying those calls because he thought it was going to go up. He could have a short position, or he could have been doing a serious bet that the stock was going to drop and was using these calls as a bit of a hedge. And boy, as that thing dropped like a stone. So it's entirely plausible that this open interest on that strike, and there's still some decent open interest, is entirely related to somebody that was buying calls in order to be short the stock.
Yeah, I'm looking here, and the open interest gapped up on the 19th, which is when we profiled that trade from 56 contracts to about 1,000, and then it kept piling up to 1,500 the next few days, up over 2,000. As they got into the earnings announcement on the 29th, it was about 1,600 still, and it still remains at about 1,600 there. So it doesn't appear that our friend was as well-timed as we gave him credit for. Indeed, he could have been hedging some other things. So he could be laughing all the way to the bank on his short position in the stock. And if that's the case, I say more power to you, sir, for your well-timed trade. But yeah, straight up on the option side of the fence, not looking perhaps so good. Thanks for pointing those out. We love follow-ups on our unusual activity. We love when you guys pay attention and point out when things work and when things don't, because that's informative for people as well, not just to pile in. If you just saw this on the surface, I'm going to pile in with this guy, guess what? You just wrote it down 4 or 5 handles, and you're not feeling too happy about that one right now. All right, next up, we got a question from our Bolin22. He writes, hey, are there active listed options markets outside the U.S. that are worth trading? Have you ever covered this? Well, we touch on this pretty much roughly in a big fashion once a year when we do our annual global derivatives guessing game, which I pretty much just use to humiliate Andrew and Mark and Uncle Mike on guessing about things like rebar futures out of the Shanghai Futures Exchange and all sorts of other fun stuff. But it does illuminate another point that there are indeed markets outside of the U.S. that are worthy of note. The U.S., of course, being the Mecca, Chicago, of course, being the Mecca still for all things options, and those are where the deepest, most liquid markets are. But we've talked in the past about things on vol views, like V-Stocks being one of the larger VIX competitors out there. Is not that deep and liquid compared to VIX, but it's something. We talked about India VIX. We talked about a lot of other products out there. The Bund, of course, lights it up overseas. So it kind of depends where you're looking. There's a lot of course, index products around the world that are also fairly deep and liquid, as well as, of course, talking about all these ADRs on the show on a regular basis. Those are clearly interesting. They're listed here, of course, but they're parent companies overseas and also doing a decent amount of volume as well. Mark, let's start with you. I'm sure you have a lot of mentees in your chat room that you've worked with that are interested in some foreign products. What are your go-tos when you're going beyond the shores of the U.S.?
I mean, obviously start with the liquid markets. I think everything should have a liquidity test. And so if you trade in and then you're married to it for the next 3 months, then that's a problem. So and typically most of outside of Europe, most of my guys that are trading in like Asia are looking more at futures and equity markets than they are at anything else, and that's really option markets are just starting to kind of come together in everywhere, but kind of Japan, Europe, and to a lesser exchange, Australia. So it just isn't that simple. That's why most of the option trading done worldwide is done here.
Yeah, Asia is certainly still a very, shall we say, nascent market. China kind of coming online in February of this year, really for the first time from an options perspective. So a lot of growth to be done there. But still are some other areas of interest around the globe. Uncle Mike, I know you're mostly SPY and a little bit of dips into GLD and formerly Apple. Anything catching your eye beyond our borders these days, sir?
No, I mean, there's things that intrigue me out there, but I agree with Mark. I like the liquidity test, and that if you're not able to get in and out of it real quickly, then it's not a good spot to be. And I remember being in London once and just learning about spread betting, and that was their big thing over there. But in actuality, I remember just doing a presentation on just a traditional bull call spread of what we do in the United States, and it really resonated with them because it seemed to really trump their spread betting. But nonetheless, I think there's a lot of potential worldwide to get a lot of things going. But I can just remember for years going overseas and traveling the world and showing the world about our markets. And we're very liquid in the fact that we can go worldwide and show people about things or show the world what we have, I think really says a lot about how advanced the United States really is in the trading realm.
Yeah, it's hard to find things that can rival what we have here or even come close to matching it, but there are some hot spots out there that we can look at. But yeah, for the most part, and particularly from an options perspective, this is still where the lion's share of the game takes place, hence why we focus mostly on domestic. Maybe we'll try to sprinkle in a few more international names. We used to do that a little bit on vol views every now and then, check in over there on things like the India VIX, which actually does some decent options volume. Certainly from an international perspective, one of the only VIX licensees that does any actual paper. So that was kind of worthy of note. And of course, the major indices around the world still do some volume on them as well. But once you get beyond the major indexes, it kind of is slim pickings from an options volume perspective. Great question, though. Maybe something we'll have to revisit here on the program in the coming days. But unfortunately, speaking of coming days, a lot to get to there. So without further ado, let's dive right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. If you're just getting into the swing of earnings, don't worry, there's still a lot for you guys to pay attention to this week. Of course, we get the big ones. I know a lot of you guys out there love Tesla. It moves, it rocks and rolls. Consumer Reports gave them quite the drubbing of late, saying their reliability numbers were pretty paltry, despite the fact that the car is very well reviewed. So that, of course, gave the stock a bit of a drubbing. It closed today right around 214 or so, getting back a little bit of the steam. But, of course, it was trading near 230 not too long ago. And you go back into September, it was even pushing the 270 handle. So this one clearly off its recent highs. They're pricing in, it looks like about 17, 18 handle move here in the straddle. We'll see what comes to pass tomorrow. Tesla has been known to be one of those ones that tends to surprise, and so we'll see if it lives up to its name and reputation tomorrow, as we also are looking for some other big names, including Facebook, good old FB, still on the horizon for a lot of you guys. A lot of you guys like to write in and ask questions and trade it a lot. So that'll be another one I know most of you folks will be watching, as well as Disney. Disney's been an interesting one to watch of late, as they've had some challenges. Of course, the threat of what's going on with the cable side of the business really weighing on them a little bit, but closing today at a decent level at around 115 or so. So back over that 100 handle that they had actually broken to the downside back in August. So safely above the 115 handle. We'll see if they can threaten that 120, 122 or so level they got up to right about, or close to right about, before all this downside started coming out. Also got Sprint and Visa and a few other names coming up. Then, of course, wrapping up the week there with our old friend, the non-farm. So a lot to really keep an eye on this week. Perhaps we'll start with you, Mr. Rock Lobster. What's catching your eye for the week to come?
Stop calling me the lobster. All right.
Oh, I gave you that's a compliment, sir.
Well, no, I mean, just because I'm actually a rockin' lobster as opposed to the other rock lobster. No, so on Saturday we're doing our vol primer. You go to optionpit.com/vol primer. We're going to teach you all about volatility, skew, you name it, the whole 9 yards of volatility. And, it's just $147 for 4 hours of great education. Use code 25_off. OFF, all caps, and you take an extra $25 off. That's just for Option Insider people. So we're going to be doing that, and then we're, I'm just kind of go to read our blog. We've been doing a lot more video blogging of late, so you can check out. We're posting 2 to 4 minute videos that are, educative and hopefully teach you some things that we look at here at Option Pit.
I'm glad you got that plug in a little bit early, sir. Anything catching your eye for the week to come here from a trading perspective?
Non-farms? That's a thing.
Definitely a thing, yes. There we go. Non-farms. A vote for non-farms from Mr. Sebastian. He's distracted by all that tasty, delicious chicken we were talking about earlier on the show, Uncle Mike. He wants to go have himself some of that. So, Uncle Mike, what's catching your eye for the rest of this week into the weekend, sir?
Tasty non-farm chicken, that's for sure. My gosh. I would say that's going to trump pretty much anything else at this point in time. There's still some earnings, like you had said, but just every week whenever we...
Facebook earnings I'm watching, I guess, too, huh? Tesla?
There you go. Yeah. So, I mean, there's some earnings out there, but for the most part, I think non-farm's going to be the big story this week, along with can the Bears get their third win this coming week?
And the answer is no, because the Bears are terrible.
Indeed, they are terrible. Well, you already heard. Go to optionpit.com. Listeners, use 25_off to get a deal on that webinar if you want to do yourself some volatility learning. In addition to that, Uncle Mike, you talked about how you can use the magic of Delta on behalf of your clients. If our listeners want to get some of that magic for themselves, what should they do?
Well, I don't mind. I'm happy to work with anyone with any dollar amount, just because of the fact that 98% of my clients are online and I speak with them over the phone. I'm able to leverage my time in such a way to where I have no minimum in terms of an asset amount like a lot of advisors do. And so if you're interested in working with me as a financial advisor in one way, shape, or form, feel free to contact me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
All right, thank you for that, Uncle Mike. Good stuff, as always. And that music means it's time for us to bid adieu to another episode of the Option Block. I, of course, want to thank my cohorts here for joining me on the old all-star panel today. You can catch their respective works at their respective outlets. Hit up Uncle Mike or surf on over to optionpit.com to learn more. And, of course, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great questions. Glad we got to feature some of you guys on the show today. I know we had a bit of a backlog there from mail and questions, and I love to make sure you guys get featured on it. You could be on every show I did if I had my choice, but sometimes time does not permit it. And, of course, on behalf of Uncle Mike and the Rock Lobster, I called him Rock Lobster again, and the Greasy Meatball, I want to thank all of you out there for downloading, streaming, subscribing to the show, sending in such great questions, and we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.